What's up, guys? Welcome back. My name's Austin. I'm here with Ryan, Lindsay, two of the ASFX coaches. We're going to get right into it today. We want to do a weekly trade recap here, but not specifically, let's go over all the winning trades or all the losing trades. We want to focus on the one or two things that we, as coaches, as traders with a little bit more experience than most of you watching probably, what we're really trying to take out of last week and apply going into next week. So each one of us here is bringing a few trades to the table to talk about, and we're going to pull some value out of each one. So Lindsay, if you want to say what's up and then kick us off here, we have GBP AUD. This is right? Yeah.
Yeah. Hope you're all good. Happy Friday to you all. So for this, it was a D1 setup on British Pound AUD, and I liked it just because of the overall bias on it of being short. But I created this a B setup, but as I've already just discussed, I would usually give this a C setup because of the more than one candle breaking through the 200. And I knew that obviously coming off the 200, it's got a lot of roadblocks coming back down through the EMAs. But for me, I gave it the B setup because of the zone, as you can see marked in red, that it's coming off of. I like to use that zone as confluence. And before using this system, I used to always use these zones for my trading. So it was something that I'm trying to apply back in to my trading now. So I wanted to get your guys' thoughts on it as well, of the grading that I gave it was the B because of the zone. But I would usually give it a C because it's above the 200.
Yeah. Well, what I would say, I love the way that and Ryan's example is really good at this too. Like the way that you both this past week used structure on top of the system. So like you now kind of have a grasp enough with the way we read the TDI and the way we read the EMAs to say in a setup like this, where some of the newer traders, they would say, well, it's oversold right here and it's a swapping TDI. So they would say, no, I'm not going to short this. You're able to say bigger picture, where's the overall bias and how can I move off of structure? So I think that's great. And then my other comment, and now I want to hear Ryan's feedback, is to what you said about the 200 EMA break up here. So what I have been using, and it's like something I've kind of used for a long time, but I also kind of steered away from it. It was never a written rule. You might have heard me say it, Ryan, maybe back in the day, but do you remember we talked about like a breach? That was the word, where it was 4 or more candles over a level. Kind of have talked about it a little bit.
Yeah, I remember.
So yeah, that's something that I've kind of kept in mind. And what I would say here is you haven't had a full breach yet by the time you got your entry signal on the 1 minute, Lindsay. When you got your entry signal, you didn't have that, what we would call breach, which is 4 or more candles closing over the level. And for those of you that are listening, the only reason it's 4 or more on this time frame is because that would be an hour. And that was just something we used as like significance. Like if it sat over a price level for an hour, that's no longer a resistance level. It's now actually probably support that it's going to try to move off of. What do you think,
Ryan? I see it. I don't think that's something that I would integrate because I think that kind of gets away to our entry signals, where if we look for a D1 or a D2, our entry signal is a break of the 50, not a breach. Yeah. Even though we want to see a break and hold, and obviously we look for more confirmations that that's going to be our move, but ultimately the trade is a break of the 50. So I think it's hard to gauge kind of favoring one but not the other.
That's a really good point too. My only question for you, Lindsay, on this trade, because I like everything about it, like I said, on the structure and everything. When you saw the first break here, did you get like right into it right away? Wow, that's a terrible circle. What was your thought? Okay, yeah, break it down for us.
I waited for the retest of the 50.
Where was that? Like over here?
No. So the first break of the 50 was move your cursor along. Yep, here. Yep. And see where just that wick touching the 50 again. I got in just on that. So further up. Yeah, round here. That was where I took my second entry. But what I've listened to you on the daily recaps was you are the next wick up. So you are waiting for the candle to actually go back through the 50 and then come back down as a body for the retest. Yes. So that was the only thing I've noticed.
The only reason I'm doing that is because I'm trying to be super conservative with these divergence trades. Like I'm not trying to get into it too quickly. So I would normally, to call it, like I would have, if I was in this trade with you, I would have done what you did. And at least half of my trade would have been in here. But I would have probably waited for something into here, lower than this, to then say, okay, if it comes back down after that, that would be the second half where I get the other half in. It's exactly what you said.
Yeah, so that's another obviously lesson learned from this trade is I want to wait for that lower high coming back down and then take it after the retest.
But at the same time, you did good to act because look, you're coming off of this significant level setback here. And look at the move off of that level. There's a lot of selling momentum in this. So to think that it would, and Ryan, I know we're going to go to your example next, and it's going to be like the same thing. Like the way you both measure the risk reward, you're not looking for it to break for a new low of day. That's not what you're thinking. You're looking for the significant level that was already set that day, and you're going to trade to that. Clearly, it's right here. That's where it had a serious issue overnight going into the London session. And look where it stopped, right at the same price. Now, I'm going to transition us over to Ryan's example because it's literally the same thing almost, right?
Yeah. And I like the confluence here, not only with that price level, like on Lindsay's trade on GA, but you also have the 200 EMA where there's no breach and no candle through it at all.
That's awesome. Yeah, I see that.
1 hour 50 EMA.
Yep, I see that right there. And I see even here, like you just really see that clean, like you see the momentum from the day before where it really pushes hard, and then you see it stop and you see it still has gas, like it's not done. But naturally, if this was some type of a level like that, I know that's a terrible box, but I'm gonna go with it for now because this preview thing sucks. But like again, if you break that box when you come back to it, what do you think is going to happen next time? You can't assume it's just going to break to the upside, especially when you see the TDI in the sell zone most of the day.
Exactly. Not only that, but you have divergence on top on the 15-minute, as well as, of course, on our 1 minute entry with the D1.
I see that. So you're looking at price rising here, the RSI setting its high there, and then coming down. I do see that. Yep.
That's the only reason why I considered it with the liquid 50 in the buy zone. Had that not been the case, I probably would have steered off of it.
That makes a lot of sense. And even going at it with a C setup, your risk reward here ended up playing out what, 3-1, 4-1?
Yeah, like it was 3.3.
Yeah, I mean that's solid. And it's cool because you're seeing now, for everybody watching, you're seeing two different traders attack basically the same move on two different pairs, but with the same foundational knowledge. Like both of you guys know what an A1, a D1, and a D2 is, but you're both using it in different ways. So it's really cool to see it coming together full thing. And your management here, I think, was really solid too, Ryan. Can you explain to us how you managed this trade as it fell?
Yeah, can you zoom in real quick to the trade? Okay, so we all see that huge spike up where it comes. I mean, that was in minutes. That was like in a matter of like 2 minutes that it just took off. And
that bar right there,
the entry, and that green line was my stop. That horizontal line, which if you go to the 1 minute, it's right above. It's basically that next level above my entry. So instead of breaking my stop up to break even, you know, religiously or to cover my spread and commission, I brought it right up there, and I mean I got within 1 pip of being stopped before I ended up tanking the rest of the way down and ended up pocketing 116 pips.
That's awesome.
So now a lot of people took this trade with me, and almost everyone got stopped out. I'm not sure who else stayed alive, but I made it.
So let's make a point of it, because this will tie into now my examples. So what I would do in a C setup is, as soon as this moved, because this moved down here after your initial entry was about 1R, I would assume, right?
Yeah.
So I would have taken some off there and I would have put my stop in profit. I would have been the guy to get bumped, and then I missed the move. That's what happened to me. But and Alex has been saying to me that you guys have been speaking about this idea of not necessarily going right into profit right away, but just mitigating, whatever word you want to use, mitigating the risk by cutting the stop down slowly, not moving it into profit right away, but also not being against that too. Once it started to move away from you, of course you're going to move it down as it drops. You know what I mean? So no, I think that, and I'm going to transition us over now to my markups, but that's a really good example of how you're taking your setups proper with your risk management, bro, but now you're looking at your exit sheet and you're trying to be even more critical of yourself there. So it shows how you're trying to refine the edge, because the way we wrote it the first time does not have to be right. We've seen in history how that is not the truest thing ever, right? So we want to make sure we're open-minded towards new ideas like that. Like maybe we don't need to lock it right away, because here, this is my GBP JPY trade on Monday. Now this is trading at 133.40, and you guys see today it's at like 137, 136. It's 300 pips higher. It's crazy. I actually got bumped on this trade in this pin right there. That's the pin that got me out. And look, it never broke the ADMA. It really wasn't, in essence, a reason to get out of the trade. But because of the way I managed the C setup by putting the stop into profit, I ended up getting tagged there. So your approach is something that I'm going to look to using a little bit more now, Ryan, going forward. I think it could definitely save me some bread.
And not to beat the horse dead, like you say, right? But I mean, I did the exact same thing with that trade, and that's what kept me alive. I brought it up to a level just underneath profit. I think it was the candle open off of the 21. Right there. Yeah, pretty much right there. I put it right under there. I came within 4 pips of getting stopped, and then it took off. I think that's what kept me alive at that trade too. Obviously, I didn't catch 8, 9 pips, but I mean, I got 50 out of it, which is fine.
You ripped it better than I did. So look at it this way now. Because my mind is, this is where I was thinking, right? This is a C setup. Then the next day I take this C setup. This one, it goes 1R, as you can see here. It ends up coming back up and stopping me in profit, and then it chopped all day. So it was good to get out of the trade there.
Yeah.
So what happens in this setup? I take the 1R and then I take the small loss. Is that what you would do there? And then you just try to like wash it out basically?
That's exactly what I do. Because by the time, excuse me, but by the time I take my piece off and my half out, you know, I'm pocketing half of my position on, let's say in this case 10 pips. Yeah. But then I take a 1.5 pip loss.
Got it. Okay, so it's still up on the day. I got you. Okay, that makes sense.
It's very minimal. I mean, it's generally, I try to get as close as I can. Honestly, even if it's, you know, an 11 pip risk, once it goes 6 or 7 pips, I don't keep the original stop. I'll bring it down.
Yeah. Bring it down.
Very rarely.
I like that, bro. I like that a lot. And then even for the other example that I was going to show was this one on GBP CHF. This one, like here, my stop was here. So I was kind of doing the same thing. It went to 2R, and then I had my stop right above this level, which I saw as the most recent higher low on the 1 minute. You see what I'm saying? So I moved the stop from here to here to here, right? Yeah. Same thing. Okay, so there I was. I think the difference is this one went 2R twice, and I was like, okay, now I need to definitely lock it. The other one here on EG, this one only went 1R. It didn't go the full where I would then look, you know what I mean, to keep continuing. But I think, Lindsay, what do you think? The structure points are a better way to maybe move the stop than just right into.
Yeah, because it can just go to that, as you say, that 1 pip to that wick, and you're going to get stopped. And it happened to me on that trade that I was in, because I thought, I seen that level, and you should just put your stop use the levels to your advantage instead of always putting it to break even.
No, I like that a lot.
I have seen it happen to many of us, you know, and it's just a pip or two that you're getting stopped, and then it comes back down in your favor.
No, I like that a lot. And even here, like now I feel like this video turned into almost me being the lesson of the week, but it's a good thing because I'm going to try to implement it going forward, because it's like, it's a good spot to be in for all of us. Like, let's be honest, right? Compared to a lot of traders that are struggling and they're just trying to get their trading career going, we're now looking at these and saying, look, I made money this week, a week that typically I suck at, and now I'm actually in a position to do even better next week, because I'm still making mistakes that can, you know, there's still more to the edge that can be refined down. So it's like a pretty good position to be in if you're going to be in any position as a trader, I feel like, you know?
Yeah, I agree.
Yeah. Well, this was good video, guys. I think this was a solid, what are we at, Ryan? 15 minutes or so?
Yeah.
Cool. Awesome. Well, listen, YouTube community, let us know what you think. A lot of value in this video. We talked about now using structure to move our stop loss. Let us know how you move your stop loss. Let us know if you manage your trades similar to what we do. And if you have any questions, I'm going to make sure that Lindsay's link and Ryan's link to book one-on-ones with them are in the description down below. So make sure you guys take advantage. Lindsay, Ryan, thank you guys very much. I appreciate it.
You're welcome.